Okay, so how bad the crash is going to be and how many millions of dollars can you make as an options trader? It's all within your hands. But first, I'm going to show you exactly what's about to take place. So this artificial move in the market's been going on for about 7-8 months. Got a lot of people hypnotized, mesmerized, buying the dip, all that sort of thing, okay? And a lot of people are about to lose their ass because they still think buying the dip is a good idea. Well, what I think is a good idea is to study pattern sequences. So I'm going to actually spell out the pattern that's been evolving as a result of daily sequences. Now, when we're talking about daily sequences with 30 market moves, it's a pattern that falls out on any particular day. When you combine them together, you get a sequence. And today, we're not going to go into the 1 day, 1 minute chart, but I just wanted to show you the contrast of how bullish this could be looking to anyone that just is clueless about the markets, in contrast to what I'm about to show you, which is the last 15 trading days. So when you looking at the overall picture, I mean, things are still looking pretty good, right? I mean, we're holding the blue line, we're holding, I mean, by all metrics, this is a solid uptrend pattern. And, you know, people don't always try to go and find the reversal of such pattern. But this is exactly how he had 30 market moves. We nailed these crazy bearish market reversals times and times again. Not only that, we've nailed the big moves after the big crashes, such as the COVID bottom. Now, I'm here to tell you that what you've seen happening between February, which, by the way, if you refer to all the channel videos, we've actually nailed that top right here in February before all the shit fucking went crazy to the April lows. Now, I'm about to tell you we're going to get twice the size of the move of that, because number one, the market never dropped. It was artificially held up here by a secret meeting, which is not being publicly publicized, but they've gotten together, just kind of like they gotten back together back in the Jekyll Island back in the days and enslaved the entire fucking financial system. But this time they got together and said, hey, we're gonna fucking buy the bond market and hold off the crash. And so this is sort of the last push high in the market of this 17-year bull run. So it's not going to be shocking to us here at 30 market moves to see the market hit the April lows, but it is going to be shocking to most of the people who are still looking simply at this chart and saying, well, this is a bullish chart, this is a bullish trend, this is what we would tell you here at 30 market moves, this is a bullish bullshit, okay? And what we do here at 30 market moves better than anybody else in the fucking world is catching that bullshit on the charts before the rest of the world recognizes it. And again, the simplest, closest situation to that was right here. Now, I'm telling you that this is going to be double worse than the situation between February highs of 2025 and April. And also notice the time frame, right? I mean, a lot of this began as an innocent setup. We're still in a bullish uptrend, but there's a sequence that we have identified back then and a sequence that we have identified of patterns now resembling that sequence very closely. So without any further ado, let me actually show you the sequence. Okay, so you're looking at the daily candle formations over the last 15 days on S&P 500. Now, if you pull up something similar like NASDAQ, I mean, you're almost going to see a mirror reflection with the exception of maybe slight size difference, but the overall pattern is going to be the same. Now, the pattern that we're actually referring to in the 30 market moves, for those of you that taken the course, you guys know that the patterns are actually being observed on 1 day, 1 minute time frame. So these are just a general representation in terms of candles, but they're visual because they're also telling you not just what happens on a single day, but this sequence of days will lead to a sequence of other outcomes. So what I'm going to do is I'm going to number the move to which each candle represents. Now, this is something that 99.9% of traders don't do, so no wonder they're clueless about the big reversals in the market that happen, or even how to trade once the top or the double top is set, on what happens and how to trade it on day-to-day basis, knowing the levels or at least the approximate levels to get in and out, and when not to panic when the bounces happen. If you're short, not to panic when the drop happens. If you're buying the dips, which would be, let me just say it straight out loud, you heard me say it before, you're a fucking idiot if you're buying the dips right now. You will lose your ass. So this is a wake-up call for those of you that are still trying to do that. If you have any remote desire to succeed as a trader, you'd better change your fucking strategy now. And that is, you should, instead of buying the dips, you should be shorting every fucking bounce in this market. So basically, we go back to Federal Reserve decision, which was right here on the 29th. And I'm going to mark this. Now, let me see which color we got. Try to mark this right across these. Okay, so this was a move 7, which, by the way, is a green move. Let me just use a neutral color because it's going to be kind of hard to switch back and forth between colors. So I'll just do a purple one here, something like that. Let's do this. So, and let me make the line just a little bit smaller here. Okay, so this was a 7. Okay, this was another 7 move. And then we had a critical 10 move. Okay, so you get a sequence 7, 7, 10. Highly bullish, right? And so when things get highly bullish after the Federal Reserve announcement, you get a move 10. Have an insane high probability of getting a bear reversal move, especially when you consider the context of the market, which I have shown you in the prior charts. The market's been in absolute bull trend for last 7 months. So when you have the context like that combined with 7, 7, 10, and actually if you're taking a look prior to this chart, you had gap up, followed by another gap up, followed by another exhaustion gap, which coincides right here. So between some other characteristics, okay, you can basically put this together. This is the fucking top. Or in this case, it was a double top where basically after the Federal Reserve announcement of cutting rates, which the market expected, instead of breaking out and going higher by a greater magnitude than what it did that day, it basically dropped and bounced. You had a situation where the market was like, okay, we're getting the rate cut, but you know, what's next? It's just like, fuck, we've already priced everything in, every positive piece of information in, and so basically it tells you like the market is out of fucking juice. So the next day you have a high probability of reversal, which was a move 2, which we told you, like anybody that traded with me that day, I'm like, fucking buy the fuck out of puts for next day. Okay, and so you have this nice little reversal day. You had another 2 followed by another 2. Now, when you have a sequence of 2s, okay, so you have 3 bullish moves, which is 7, 7, 10, followed by 3 bearish moves. Move 2 is just like, it's a bounce, drop, bounce, drop, bounce, drop. It doesn't have to close at the lows of the day, but the overall, you know, thing here is it's a topping move. It's something is trying to go high, but it's failing. And what's remarkable here is, as you see on these 3 days, the market completely failed to close above the level after the Federal Reserve decision was revealed. So that cannot be a good thing. So what was perceived by the market as an initial positive, now we have 3 back-to-back confirmations that it's really not a fucking positive. And I've mentioned it on the most recent podcast, guys, which was posted, guys. Guess what? It is timestamped. Look at November 12th. November 12th, I posted a message saying basically how excited I was about putting some big short positions. And I said this was the last day of the bounce right here. Okay, and we're going to get to that in a moment. But the point is, look at the level of this black candle and these 2 black candles. I mean, this one couldn't close above the body of these prior 3 candles. Okay, and that's the day where I basically said, this is it. This is the last fucking bounce after which the market is going to be in the collapse mode. So we haven't seen even literally the beginning of the collapse mode yet, but we had 2 predominantly red days on which the market initially dropped almost 300 points. So I posted this before a 300-point drop based off this sequence that I'm revealing to you guys basically in slow motion right now. And for those of you that are totally unfamiliar with 30 market moves, like all of these numbers that I'm drawing is just a sequence that we're collecting on the 1 day, 1 minute chart, and then we're plugging in on the daily calendar to arrive at these sequences that overall tell us what's the probability of the next day pattern, and it's going to be a number 1 through 13. So to continue with the pattern, when you get a 222, okay, the overwhelming probability of a gap down at that point, which would be a variation of a move 3 or 11 or 4, I mean, they're super high. So that's the day when you have a sequence like this. This is not when a trader should be like, oh, well, let me think about it. Maybe I'll buy a couple of put contracts. It looks like the market doesn't want to drop. Now, you want to do exactly the opposite. You want to go fucking strong and heavy on your put positions. Okay, when you get a sequence 222, I mean, you'd better fucking go, like, and traders would tell me, well, Leo, but I can't risk everything. I can't be like, fuck you. Then don't fucking trade, okay? Because if you're missing like days like this where you put in your short right here on the 222 sequence, when you're reluctant to go and put big heavy positions and hold them overnight, that just tells me how little your understanding of the market really is, because you're still in this mode after the market's been going high and high for like 7-8 months. You're still in the mode, oh, but it's gonna bounce, and that fear of a bounce is costing you millions of dollars in the market. So for those of you that put your big short positions with a 30 market moves coach, you know, you fucking banked, okay? So this is a move 3 as far as the candle, all right? And overall now the sequence is evolving to be pretty fucking bearish. So 10, 2, 2, 2, 3, okay? Sometimes back to back you will get some 3, 3, 3 or 3, 11 type sequences after that, but instead you have an oddball here, okay? And this oddball move was a move 8. Basically, the market dips initially, and then within the first 30 minutes, it reverses the fuck out. But then it doesn't close, as you can see, nowhere near the daily high. So it was another market effort to bounce, okay? And even though overall, you would look at your screen that day, and all 3 indexes were in the green, okay? But this was actually, if you study the sequences, this was actually a very bearish day. And if you were trading with me, and even in the group, I sent a message and I posted, I said, guys, when you have a move 8, which normally most of the time only happens in the middle of a bullish sequence. So for example, you could go from 7, 7, 8, 7. So it could be like a move that's happening like in between of 2 bullish moves, 2 green days when the market is actually beginning high in relation to the prior day and finishing higher. But when you get a move 8 in the middle of a bear sequence, this is like a desperate market move to try to go higher, and like it is 100% failure rate. Like we've actually studied the moves, like on day-to-day basis since 2017, and now we got these AI software that we've been working on for years that actually is going to collect data as far back as 20-30 years. And there's something exciting I was going to talk to you about, guys, in the next couple of weeks. But we're very close to that, to where there's actual code software that's going to populate all the data prior to the time frame that we've accumulated it manually. So basically, if you go and study all the sequences, if you get an 8 in the midst of a bearish sequence like a 2, 2, 2, 3 sequence, all of a sudden you get an 8. That's a move of desperation, and you've got to know that this is not a damn reversal. You've got to know that this is a desperate move before a much bigger drop, and that's exactly what you get the next day, which is another move 3. You get a little gap down, and then the market drops for the rest of the fucking day. All right, so this was an awesome entry. You guys traded that. Like, let's say you came on board, you missed this 222, and you know you missed the 3 move, and like most of the people will be buying calls once they see a green day after this, not knowing that the big trade lies into shorting this bounce right here on a move 8. So there's an insane statistical evidence that we had. Once the move 8 pops in the middle of a bear sequence, you do nothing. You don't dare buy fucking calls. You short, 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 okay? And move 3, as you can see, results in another gap down and another major drop. Yes, the market doesn't finish at the lows of the day, but the distance between the top of a move 8 to the bottom of this move, which is a move 4, okay, I mean, it's astounding. Like in terms of weekly options, I mean, this is the kind of stuff, guys, that like seriously, with 10K account, I mean, this equates to like $500,000. Okay, so you tell me what's more important, watching the fucking news or studying the sequences? Because I tell you what, every trader watches the news fucking 99% of their time, and they don't spend any time literally on actually studying the sequences and understanding these patterns. So here comes the move 7477. Okay, and the importance of it is the market really, okay, it's just coming back to this level. So know how promptly, okay, so I'm watching this sequence. I'm also watching the diminishing volume on day to day, which is a bearish divergence. There's other clearly factors that I'm putting in together along with this, but the point is, I don't send you the message, hey, you should fucking go big right here. You shouldn't go big right here or right here. Like, look, it's November 12th. Go look at that video. When we finally get here, fucking excited because I know the sequence, right? I know the freaking sequence, okay? And so this was the fucking top on November 12th. This was the fucking top. And I told you guys loud and clear, you go big here because the next move is way the fuck lower, which was a move 3, okay, and then subsequently, like, look, 3, 4, it's a mirror image after we set that high right here on the move 8, 3, 4, and you get in the mirror image 3, 4, which, by the way, I mean, we could have easily, they really saved the market this past Friday, but like, guys, I mean, this could have been a brutal 3, 3, 3 sequence that we could have been headed into. Sometimes the market will pause before it will resolve a much bigger drop, which, based on this sequence, guys, all right, also this day right here, we could have gotten a way bigger reversal, but overall, just so you know, for, I mean, the sake of the sequences, okay. Right, the market opens slightly higher, sells off, finishes close to the towards the end of the day, the market pulls itself out of the depth of the drop. So you basically got a solid move 2 right here. Okay, so you go from a move 2 to 2 right here, 3, 8, 3, 4, 7, 7, 2. Okay, followed by 3, 4. So as you can see, just by looking at this, okay, without even having like what last 8 years of data that we have, 7 years, you go, you can basically see that once you have a Federal Reserve 10 top, you know, after a 2 comes a high probability of a gap down and a reversal low, which you can see a sequence 2, 3. Happens again here, 2, 3, and it's not a coincidence that it happens at the same fucking level, okay? As you can see, predominantly over the last 15 days, now I don't have them color marked, but I mean, these are all green, 7, 7, 10, these are green moves. These are all red moves, 2, 2, 2, 3. So you have 4 red moves, 4 green, and you have 2 more 7, 7, and so you have basically the red moves outnumbering the green moves here, but okay, only by a little bit. And this is overall still a major top information, okay? And it's the number of 2s, the number of move 2s, and the inability of the market to basically reconquer the levels that were set right here. Putting all this information together tells us there is a major fucking fall off that's about to take place in the market. And I'm going to take you back now to the bigger size chart. I'm going to show you the levels where we have calculated the market's going to be going this week and next. So now this exercise I'm showing you here is not just applicable to the indexes such as S&P 500, but you can also apply it to NASDAQ and Russell 2000. And Russell 2000 could be arguably the biggest percentage dropper out of all the indexes because it deals with the weaker stocks, with the smaller size stocks. And we're not going to get into macro reasoning in this video, but just understand that when the macro aligns with the micro, and you got this sort of a sequence in development where the number of basically red moves and bear reversal moves now outnumber the number of green moves or bull continuation moves. I mean, this is your mathematical equation for a severe market drop ahead. Now, just because I'm phrasing it like that, it does not mean that all of a sudden, you're not going to have any more bounces in the market. As a matter of fact, bounces are highly desirable in the market when you're a short seller because that gives you entries. Because otherwise, I mean, if it was a falling knife, which on a lot of days from here it's going to look like a falling knife, but without bounces, you couldn't even get an entry as a trader. So you should be excited about days like this, like a move 8, or a Friday, like a move 4, to where, sure, we were already heading for a collapse, but we paused and we bounced. So that gave a lot of our traders a chance to actually build some big positions on the short side going into this week that's going to begin tomorrow on November 17th. But clearly, the future is going to be open for trading tonight on November 16th, 6 p.m. So you shouldn't even be waiting. So if you missed all these entries, I mean, you should be. This is not the moment to go light on the market. This is not the moment to take this sequence lightly. This is not the moment that, you're buying the dip. I'm telling you, anybody's going to buy the dip, they're going to get fucking killed. So you're going to have a record number of traders that are going to absolutely go broke because they don't understand this sequence. And they're going to try to keep using the strategy that have worked for the last 6 months, 7, 8 months. They're going to try to apply it going forward, buying the dips, while in reality, this is a numerical description of a bear reversal in the market. Okay, so let me just take you back to the overall picture and show you the levels. All right, so the first level we're looking at is going to be around 6,300, exactly where this gap was here, basically about 6,280 to 6,320, and we could reach that level as early as this week that begins on November 17th. So November 17th through 21st, I mean, we could easily be here. Now, the crazy thing is we could be here as early as tomorrow, as late as Friday, but the overall move is going to get us here at some point this week. Now, where things get a little wild is over the course of the next 30 days, I mean, we could be as low as the April lows, okay? And it has to do with a lot of ingredients, okay? The liquidity is drying up in the market, and so you should not be calculating for the market to move in the same fashion it has been, which is these daily tiny little candles where basically the market is only moving just a fraction of points where it normally move on a regular trading session. So like these 20, 30 point days, you're not going to see that anymore. The market is clearly going from a major move expansion, and so the market is going to move like 100, 150, on some days 200, 300 points in a single trading session going forward. And for that reason, you're going to see candles that are more going to resemble this size of candles right here. And when you get this size of candles, it doesn't take very long. As you can see, like for example right here, it doesn't take very long to go from 5,800 to 4,800. It's only a few trading sessions. So it may sound like it's a wild stretch going from 67, 6,800 down to 4,800 in a matter of just a few trading weeks, but it's not. Okay, so get ready for a move expansion. Get ready for some bigger daily candles. And that's why buying puts out of the money makes sense. When the move expands to the downside, that's when buying puts out of the money actually makes sense. Now, don't attempt this shit on your own. Okay, you should get in touch with the 30 Market Moves Coach and Trade. Okay, the way we trade our system, because guys, a simple error could cost you a bunch of money. And for someone that doesn't understand the sequences, just understands, like, okay, the progression of the market. Just understanding the market is going lower is not enough to make money in the market. Just understand, oh, there's a big crash around the corner, doesn't make you money, because where traders get fucked is, you know, sure, they don't enter the trades on the bounces, number one. They enter the trades where it's clear to them the market is going lower, and at that moment the market reverses and it goes higher. And you know, I mean, that's what happens to 99% of the traders. That's how they lose money. They know the market is dropping, but once they're in that trade, once they're in that position, okay, they're helpless, because their level of conviction dies so quickly the moment the bounce happens. So you really got to understand the sequence. You really got to understand the patterns to be able to hold the trades, to be able to not overreact and let your emotions fuck up some of the greatest trades you could be having. And for that reason, okay, the only way, okay, you should be attempting this, you know, trading the 30 market move system is with a coach, and not just half-assed. Not like, oh, I may take this trade, I'm not, like, I don't know if I should do all that garbage. That's why you're not making fucking money as a trader. You got to make up your mind, follow one fucking system, listen to your coach if you're serious about it. If not, you might as well just not even fucking trade, because what most of the traders doing right now, they think they're doing, or what they're calling trading, is like getting in and hoping that the account is not going to go red, it's going to go green, and the moment it's green, they're cashing out some of the shittiest fucking profits that, you know, they shouldn't. You know, guys, that's not trading. Your goal as a trader to beat the market in a profound way, okay, capture the big move that is going to take place. But unfortunately, most of you're going to allow your emotions to fuck you out of these trades. And the only solution I know to make sure that does not happen is to trade with someone here at 30 Market Moves that will actually, okay, tell you not to get your fucking emotions involved at the wrong time, and stick to your trades, and stick to the daily plan, and stick to the fucking strategy. And that's the only way to beat the fucking market in a big way. So if that's what you want to do, let's fucking do it together.